I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's on the top of your mind this morning?
Drug stocks. They don't seem to quit. Ever since Elizabeth Warren peaked, you just keep seeing them going up. And we own Bristol Myers for Action Alerts. But Lilly, J&J, Merck, they don't want to quit. And I think it's important because what it says is, you may think, this is one of my themes for Action Alerts, you may think that certain stocks are valued perfectly. This just shows you exactly how wrong, because big cap stocks, how wrong the market is so often. And this was not always the case. In my career, typically stocks were, as a group, were usually pretty well valued. I think ETFs, lack of new players, have made it so that you can buy stocks and just find them to be radically misvalued. JP Morgan at 106, Disney at 105. These stocks were just poorly valued, and I think that the day of the stock picker's back. Because what happens is when you have a poorly valued stock, there's tremendous ability to be able to make a lot of money.
And I know that your Action Alerts Plus members only monthly call will be focusing on one particular drug stock.
Yeah, but I think that we're going to go over initiations. And it's one of my favorite parts, because what I like to do is, again, this is demonstrate how we pick stocks, which is to demonstrate how you should pick stocks. I mean, I was saying last night on Mad Money, what is the purpose of Action Alerts? Well, it's so that after you put your index fund, and I am saying you must do index funds first, after you put your index fund money away, say with a 401k, then you have enough money to buy some individual stocks, and that it's worth it to own some individual stocks. I want to repeat again, I'm very pro-index fund, and I have everything in index funds because I can't own individual stocks other than my charitable trust, and I'm not allowed to take any profit from my charitable trust. That has to be given away, but it's how to own a couple of stocks, and this is particularly of interest to the 10 million people who opened up an account with Robinhood in the last couple of years, Millennials.
We'll talk about Millennials in just a second, but you guys should head on over to actionalertsplus.com after the show to watch Jim Cramer live at 11:30.
Oh,
Jim,
11
this
today.
morning.
Yeah.
So, Jim, let's talk about the Federal Reserve, because they're meeting today, and we're going to get an announcement on rates, which we assume will be nothing, that they're not going to make
you never
a
assume
rate
nothing,
cut.
Because Jay Powell, the Fed chief, has periodically not meant to drop a ball, but then there'll be reporters who will interpret his statements as something that's negative for the stock market. This is time-honored. It happens over and over and over again, and I just want to caution people that the reportage is usually far more negative than the reality, except for last year at this time when the Fed was just totally off the reservation. The reportage is always, it's kind of like when I was a sports writer. You're always afraid to criticize the team, because then you're afraid you won't have access. And I find a lot of the reportage of the Fed is they're kind of afraid to criticize the team. Maybe it's because they're worried about access, but you can't think like that. You have to just say that the Fed did a terrible job last year at this time. Terrible. And they're certainly, looks like, doing better, but you never know. You never know. The Fed, Janet Yellen made very few mistakes, but Jay Powell's learned, but I don't know if he's learned enough. So when you least expect it is when you most should expect something. And that's why I did a piece the other day on Real Money, 1-2 punch, that Jay Powell goes off the reservation again, and the president says, listen, we'll talk to us at the end of 2020 when we'll make a deal. I know the president felt very emboldened to not make a deal after the employment number. Now, there is some, speaking of reportage, there's a lot of difficult reportage on the trade deal, and I came out yesterday and said, I don't want to do any viewers disservices on Real Money. I am saying be ready for disappointment with a list of stocks. One of them may be Home Depot, which allegedly guided down, but did say the capital expenditures will be done in 2020, which is makes it so that even though I'm critical of them, that it's probably a buy here.
But I want to ask around the Fed, are they in a holding pattern until we get a signed trade deal?
No, we don't know. I mean, I think that Jay Powell doesn't know what to do. I mean, I think that he has to do these press conferences. He has to say something, and that's where he gets in difficulty. He should never have done this every month press conference. All he did is just create more problems. Simplify things. That's what you want to do. Just say, here's our statement, and once a quarter, answer some questions. But beyond that, to do once a month is do at every Fed meeting is very onerous because you have to go through a thicket, and you don't want to say something that is upsetting the markets that you don't mean.
Let's switch gears. Let's talk about oil because we've got two big headlines driving the markets this morning. We've got Saudi Aramco going public, and we've also got Chevron taking a write down of around $11 billion. So I want to ask you what your outlook on oil is for 2020.
Well, I mean, Chevron, that's when you take these write downs, it's kind of expected because you just look at what they have. And Mike Wirth, unfortunately, did not pay up for Anadarko. That's what matters. The Saudi deal was a kind of a rigged deal, and that they figured out what price and figured out where it should be. We've got to see what the yield would be. We've got to see what it's really sensitive to. We don't know if it's sensitive to the price of oil and terrorism, or whether it's sensitive to their cost. I mean, I don't recommend the stock because it's tough enough to own BP, which we own for the Charitable Trust. Don't need a further complication. Remember my keep it simple, stupid.
But what about the sector? How does that look going into 2020?
Well, we don't like sector. Now, I know Dan Fitzpatrick, who does some great stuff for us, is saying, listen, take a look at the sector. I think that copper is better. Aluminum's not doing well. Oil tankers are doing well. It's split between good and bad, and that's too hard for me. Don't want to do it.
This morning over on Real Money, you wrote about millennials. In fact, you jokingly called them pesky millennials, and you noted how they always follow the trends. And so I'm wondering, with all these trends coming and going and these millennials being so involved in them, how can Wall Street profit off of millennials?
Well, I think that you have to understand that they're fickle, but you also have to understand that they want affordable luxury. So you're looking for what affordable luxury is. Now, Toll Brothers stock was down yesterday. It's all caught up with the Fed and stuff. But what the piece is basically saying is they're spending. And affordable luxury means Costco. It means Walmart, Amazon, Target. Maybe Home Depot again. I mentioned Home Depot after the further guide down, which might be a fatuous further guide down, because it isn't like Home Depot was saying that they were going to do X 4 weeks ago and now they're even going to do less than X. I think that that's a series of mistaken headlines. But I do think that Home Depot is probably right here.
All right, Jim, thanks for joining us today.
Thank you.
Now we got to get Jim back to the studio to get ready for his members-only live show at 11 a.m. this morning over on ActionAlertsPlus.com. If you're not already a member of Action Alerts Plus, you can head on over to ActionAlertsPlus.com to sign up. I'm Catherine Ross, and we'll see you tomorrow.